keep you. Don't know how to keep you. Don't know how to keep you. Don't know how to keep you. How to keep you.
Hello, and thanks again for joining us here for another video. And we're lucky enough to be here with Michael Wills from Profectus Lending, and we're here at their office in 5 Latrobe Terrace in Paddington. Now, Michael's been doing mortgage broking for about 18 years, a lot of history, a lot of experience, okay, knows the ins and outs and has seen it all. And we've been fortunate enough actually to have some time out of his busy schedule to I guess have a chat with him about what the market's done, what it's doing, and maybe some tips about what to look forward to and what to look into with your finances and your mortgages. So firstly, thanks a lot, Michael, for I guess squeezing into your busy schedule. Yep. But look, I guess one of the big questions we're getting now is the whole lending sector. It's obviously a lot's happened in the last couple of years even, but the density of the last 6 months has been quite, I guess you want to call it volatile is probably the word.
Extremely volatile.
Okay, so can you give us some insight to what happened and what's happening?
Before COVID hit, I think lending side was going really well. Volumes were up, people were buying houses, people were refinancing, doing the whole box and dice. Obviously, once COVID hit, the banks itself got pretty nervous. They got conservative. They started their lending practices obviously changed. Technically, it's a little bit harder now to get a loan. Also, actually, it sort of coincides with a lot of the new regulations which the banking industry are bringing in. So a lot of living expenses, stuff like that. So add all that together at one, it creates a very interesting time in the lending side of things. So it's not easy to get a loan. They're trying to promote it. Say, for example, your first homeowner grant at the moment, or the new $25,000 thing that has just come in. Look, everyone's trying to get everyone back into it. It's not as easy as that. There are regulations. You still got to have your general 5% genuine savings, all that sort of stuff. So it's different. So don't think for a second that it's easy, but yes, for the right people, absolutely.
Gotcha.
There's lending to be done.
Got you. So look, we've obviously seen a bit of unemployment as well with the whole COVID scenario, and that's obviously affected the whole lending sector as well, because if you have been affected, I believe it has a slight effect with your lending, I guess, abilities.
Yeah, look, there's double side here. Yes, it's affected the lending practices. However, interest rates, wow, I mean, as low as they've ever been in the history of lending.
Yeah, that's true.
You're getting cheap fixed rates of around 2.2, 2.3%. Variable rates, 2.7%. Unheard of.
Wow.
And that's why it sort of leads into a little bit of the refinancing.
Gotcha.
Obviously, a lot of people are still on the higher rates. So has there ever been a better time to look at your mortgage? It is now, because you can get some really good rates, and refinancing, there are benefits to you. You will save money. Yeah.
So do you think, Michael, people are actually pushing forward and doing the whole refinancing, or are you seeing a lot of I guess uncertainty? Because me personally, I've come across a lot of clients that I've met recently, and they're on a rate they've been on 4 or 5 years ago. And my first thing to them is, have you looked into a new loan, and have you looked at refinancing? And they're just unsure. I mean, the response I get is like, oh, I don't know if I can or I can't, and not sure. What do you have to lose if you go and attempt to refinance? Can you just let it run?
There is no cost to the client to do it. At the end of the day, it's just an inquiry on your credit report. Yeah, do it. If it doesn't work out, that's why I guess at the end of the day, that's what we're here for. Mortgage brokers are here to do that. We're to look at your situation. It's a phone call. Give us a call. We can have a look at your current situation. We can tell you if it's viable or not. And then if it is, we can tell you how much you can save. No brainer. Gotcha. It's best to do it.
Fantastic. And just as an example, what's a recent case study you've had that maybe someone saved a fair bit of money, just as a rough idea, so people can at least gauge the I guess the severity of how much money you can save?
Well, generally, I think if you look at some current people who have got their current interest rates, you know, they might be 3.5% to 4%. You can get that down to about 2.7, depending on the dollar value. You're saving easily a couple of $100 a month.
Wow.
And I tell
There
you,
you
what,
go, guys, free money.
Yeah, in everyone's budget in this day and age, any sort of money saved is better in your pocket than someone else's.
Okay, so I guess the last thing I want to quickly ask you is, recently I've had a lot of people, first home buyers through some properties that I've just recently listed, and first home buyers, obviously it's that first step, it's that first initial step that they're unsure about, can I, can't I, what do I need, what do I don't need. Can you give us some 3 tips for a first home buyer to, I guess, take from this and to say, all right, well, these are things I need to have in order before I go look at my property or you know, I guess purchase?
Okay, basically first, deposit. You need to have at least 5% genuine savings held in account for over 3 months. That's number one. Alternatively, if you're using a guarantor, then that's not an issue. But generally, first home buyers are looking to do it by themselves, so 5% genuine savings in an account. You must be in your job for, the general rule for mortgage insurers is 12 months. It can be less than 12 months if you've been in the same field for 2 years. You also have to cover off deposit, which is a 5% deposit, plus mortgage insurance. And that's the thing that a lot of people don't realise. They just go, oh, I've got my 5%, but you've got to pay mortgage insurance as well. And mortgage insurance, I'll be honest with you, it's not cheap. Anything from maybe $4,000 to $15,000. So you have to add that on top of your actual deposit.
Yeah, and just to clarify with you, as a first home buyer and to live in the property, it is definitely principal and interest.
Yes.
Is that okay? Cool.
Has to be principal.
Yeah. So keep in mind you have to, you know, I guess service the loan as well, and keep in mind there's the cost in there, and of course the cost of living. But look, great advice from Michael here at Profectus. I'll leave his details at the end of this video. Look, thanks again for joining us, and Michael, thanks again for taking some time out in your day, and mate, all the best. And if you guys need anything, Michael's the man to call. I'll put his number and email, as I said. Look, there's no harm done in just reaching out and making a phone call.
It's just
thanks
a phone
again.
call. Thank you.
Thanks, Michael.
Bye.